Good morning, Paul Georgi from Allendale. It's February 28th, 2012, and it's Tuesday morning. Are we looking at a turnaround Tuesday? Well, right now we're getting more follow-through from yesterday, led by the soybeans. It's been fun buying is one of the reasons for the strength in the soybean complex, combined with some fundamental news. The weather in South America continues to forecast rain, and in general looks like we should see better and improving crops down there. However, many organizations out of South America and Brazil are decreasing their production for Brazilian soybeans. Ag Rural yesterday came out at 68 million metric tons. That was down from what the USDA's latest projections were at 72 million tons. So those factors, combined with the port problems that are in place in Brazil and in Argentina. Yesterday we were hearing that there's been much as 23 days of backlog right now in the ports of Brazil in order to get soybeans loaded. Some of it's because of problems with loading facilities, others low water conditions, and what that does is creates the South American soybeans to be higher priced than U.S. beans. So therefore, traders here in the U.S. are expecting China and the major buyer of China to come in and buy soybeans out of the U.S. And that's giving us strength in the nearby contract and continuing to hit stops and make new highs and continue to have more fun buying to push that market higher. Now, the USDA had their forecast out on Friday, and that's a number also that's creating excitement here in the soybeans. The USDA Outlook Forum put ending stocks for soybeans for the 12-13 year, tightened those stocks considerably, reducing some of the stocks here for the 11-12 year compared to what the USDA's official estimate was on the February report. So those numbers and the increased demand coming out of South America and because of South America coming to the U.S. is driving prices higher. Now, something we need to watch here is the spread between corn and soybeans. That spread is widening out to 2.3 or higher right now of value of soybeans to corn, giving it an incentive again to planting soybeans. And we're starting to hear producers talk about that incentive of planting more beans now, less corn, because of the higher cost of putting corn in the ground. Now, there's still an advantage if you take the average price of December corn and the average production of 164, multiply that and multiply the average soybean estimate yield versus the November price. There's still about $340 an acre advantage to planting corn than soybeans. So still some advantages there, but certainly losing that advantage compared to a few months ago. We also had the S&P has downgraded Greece debt again, which really not a surprise, but out of that we see a stronger euro and weaker dollar here this morning, also creating some incentive to be long the grain markets or buying that we're seeing here today. We're seeing short covering in wheat, and the corn market dragging along 1 to 2 higher expected on the opening. It's getting its support mainly from the outside or the other grains such as soybeans and wheat. In the livestock complex, beef prices there have continued this week, making new all-time highs for beef. We had choice beef up 114, that was a record high of 198.56, and select at 193.99, that was up 59 cents. So seeing some strength in the product, but still struggling with the packers' margins. They continue to reduce production in order to support that cutout value and hopefully help their profit margins. Beef, the cattle fed cattle this week expect to trade steady, and I think a big determinant in if we get higher fed cattle prices this week again is going to be, can the futures sustain their strength? Yesterday we seen kind of a reversal, a little profit taking there, seeing a little profit taking this morning, but in general still very tight supplies and of fed cattle that will continue to support the futures and support the fed cattle prices here. We don't expect any cash trade to be made until late this week again, as packers continue to wait and hope that they can get these cattle bought cheaper. And the futures in both the pork and the cattle expect some two-sided trade there, and with good support on any kind of corrections in the livestock complex. So if you got any questions, don't hesitate to give us a call here at Allendale. Also a reminder, we are doing the Allendale annual planted acreage survey. You can go to our website, fill out the survey there, or you can just give us a call, and we'll fill out the information for you. And any information and any time that you can help us out here, we'd appreciate it, because it does make the difference in the bottom line. So give us a call with any questions. Check us out on the web, and we wish you a very successful trading day. Thank you.